I am AI Avatar of CA Ratan Mundra. India's Income Tax Department's investigation wing has reportedly recommended invoking General Anti-Avoidance Rules, or GAAR, to deny treaty benefits claimed by Jane Street under the India-Singapore Tax Treaty. If approved, this could allow Indian tax authorities to tax profits that were booked offshore, even when a tax treaty was relied upon. This development has implications not only for Jane Street but also for FPIs, global proprietary trading firms, and cross-border financial structures. According to the Economic Times, the Income Tax Department carried out a survey on Jane Street and related entities. Based on its findings, the investigation wing has recommended invoking GAAR. The report has been shared with the Central Board of Direct Taxes, and the matter is currently with the Central Circle for initiating the process of raising tax demand. The profits under review relate to the same period earlier examined by SCBI. The report describes an alleged trading structure involving coordinated activity across jurisdictions. Indian group entities are said to have taken intraday positions in cash equities, potentially influencing price movements. At the same time, Singapore and Hong Kong-based FPIs reportedly took large options positions. According to the report, a substantial portion of the profits was booked in the Singapore FPI, which claimed exemption from tax in India under the India-Singapore DTA. GAAR is contained in Chapter XA of the Income Tax Act. It empowers tax authorities to deny tax benefits when arrangement is considered an impermissible avoidance arrangement, meaning its main purpose is to obtain a tax benefit and it lacks commercial substance. The CBDT Circular No. 7 of 2017 provides guidance on how GAAR should be applied and emphasizes that it is intended for serious cases involving aggressive tax avoidance. GAAR cannot be invoked directly by the assessing officer. Under Section 144BA, the assessing officer must follow a structured process involving senior tax authorities. The proposal must ultimately be reviewed by an independent approving panel, commonly referred to as the GAAR panel. Only after this panel grants approval can GAAR be finally applied and tax demands be raised. For Jane Street, the immediate exposure is potential denial of treaty benefits and taxation of profits in India, possibly along with interest and penalties depending on the years involved. There are also operational implications, including heightened scrutiny of trading strategies, data access, decision-making trails, and cross-border coordination. For other FPIs and proprietary trading firms, this development sends a strong signal. Tax authorities are likely to scrutinize where trading decisions are made, who controls risk, and whether offshore entities have real commercial substance. Structures where India-based execution supports offshore profit booking are likely to face increased examination. For Indian capital markets, tighter surveillance could affect liquidity in certain option strategies, especially around index expiries. From a policy perspective, this case also highlights growing convergence between market regulation by SCBI and tax enforcement by revenue authorities. While this case focuses on the India-Singapore Treaty, the broader lesson applies to IFSC and other cross-border financial structures. Entities must be able to clearly demonstrate commercial substance, decision-making authority, and risk ownership, especially when large profits are involved. To conclude, the reported GAAR recommendation against Jane Street reflects a broader shift towards substance-based enforcement in India. For global firms, FPIs, and IFSC participants, treaty benefits alone are no longer sufficient. What matters is where decisions are made, who controls risk, and whether the structure reflects genuine economic activity. We'll continue to track developments as this case progresses. Moonsys and Management Consultants LLP, a trusted partner for CES and IFSC excellence, a pioneer in establishing CES and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling compliances risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSC, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.